Today, we will learn about market cycles, trading traps, and stop-loss hunts. In the first section, we'll talk about market cycles from human emotions and try to determine where to buy or sell or take profit. In the next part, we'll focus on stop-loss hunts designed for new traders. Then we'll talk about where not to enter a trade and how to be patient, and the best possible entry locations. If you're ready, let's start it. The first thing that we should learn about markets, they follow a certain momentum, like waves. You'll never see a linear or straight line markets. During these waves, price gains momentum and loses momentum for healthy price action to satisfy buyers and sellers. Otherwise, there would not be any buyers or sellers in the markets. As you can see, generally when you see a high quality and strong market structure break, there will be the following break of structures. This is the nature of the market. Of course, nothing will be perfect like in these drawings, but this will give you the idea. So, there will be pushing forces. It is best to enter these forces as early as possible from the beginning of the momentum. What does it mean? It simply means that looking for the trades with the market structure breaks and the early break of structures. This will increase your chance of winning trades and possibly reduce the number of traps and stop-loss hunts. As a result, if you try to catch trades at the end of a momentum like a very late break of structures, you may be stopped out. Of course, I want to state this again. Every single high-quality break of structures is tradable. But if you can catch it at the beginning of new momentum, right after an MSB, you'll increase your chances and profit margin. You can see a clear example in this chart, how the price moves in waves with certain momentum. If you look at the left, the market structure is shifting and starts a downward momentum with set of break of structures. So if you can catch the movement as soon as possible, it is best for you. You will have more targets, more momentum, and more chances. However, if you are too late, you'll probably enter a trade at the end of the momentum. Late momentum trades are still tradable. I also do late entries. However, I know that I am reducing my chances. As you can see, market structure shifts again and creating new set of break-off structures. It will be the same logic. It is best to enter as early as possible from the beginning of the momentum. Here's a trick for you. If you cannot be sure of a market structure break, then wait for the first high-quality break-off structure before entering a trade. This will double confirm a possible trend change. Of course, never forget combining high and low time frames and finding micro market structure breaks, still the best entry model in the world. Markets move in cycles between greed, regret, fear, and hope. This cycle keeps happening in every single time frames, in 1 minute, in 5 minutes, in 1 hour, or even in weekly charts. This gives us clues about when to short or long the asset. Greed is when the price is expensive, which is generally in the premium zones or the fresh breakouts from a previous swing high or low. Greed aims to trap new traders. You also know this as fear of missing out, FOMO. Then comes the regret. Why? Because you're too late. You bought the asset too late, way too expensive. Actually, this is the great time to take profit from your long positions or start to look for short positions. Next is fear. Regret quickly turns to fear and panic sales start. These are areas of quick drops. This is where you start to take partial profits from your short positions. Finally, the hope. This is the general discount area after a pullback. This is the area that new momentum starts. You just use the price action like MSB to look for long positions until the new grid stage. This is a very common pattern that you can also find it on the internet. As Warren Buffett says, be fearful when others are greedy and greedy when others are fearful. Now let's talk about more specific stop hunts and traps. This is one of the best examples of stop hunting, combination of imbalance and equal highs or lows. When you see a high quality break, what you can do is check the left of the chart, as I always say, because there could be traps for stop hunts. Imbalance and equals combination is extremely dangerous before opening a short or long. To be honest, I sometimes forget this, and this is one of the biggest reasons that I am being stopped out. Let's see this example. As you can see, the price keeps falling sharply, breaking structures one after another. As I said before, if you are late with the momentum, it is not the best forcing a trade. This price has already dropped a lot, and there will be a reaction somewhere. Now, as you can see, there is an extremely high quality break here. It leaves giant imbalances. It has a nice order block and supply area. It is in the premium zone. Everything is perfect, except two things. First, the price has already dropped a lot, and it may start losing momentum. Second, the imbalance and equal high combination above just pulls the price so strongly to hunt stop losses above there. This is a low probability trade because there are so many reasons for a strong pull. And again, combining low and high time frames is still the number one security that you will get against stop loss hunts and traps. When I tweeted about Ethereum, I warned people that the price was being pulled by the imbalances and equal high above, because my experience shows that this combo is extremely powerful. In a couple of days, price pierced through equal highs and tried to fill all the imbalances. This is another stop hunt trap that I fall into sometimes if I am being lazy. Very close equal highs in high time frames. When you analyze the high time frames, it is best to identify the previous swing highs and lows. If you notice the price is extremely close to a previous swing high or low point, you should be extra careful. Price may hunt the stop orders at that level. It is best to wait for the liquidity to be hunted first. If you look at this example, you will notice a market structure break right here. It is a strong enough break that leaves an imbalance area. It is a good place to take a trade. However, when you look at the chart from a wider perspective, you'll notice a very significant swing high point. And the price almost touched that. It is extremely close to the swing high point. So our first MSB fails, price moves above and hunts that stop loss orders first, then starts to move down. Now we can wait for an MSB or break of structures to find clear entry positions. Another stop loss hunts are significant imbalance levels from the high time frames. I would definitely suggest you draw your high time frame imbalances before analyzing low time frames. You should always think of all the imbalances like power snacks or energy drinks. It gives the price short-term fuel and reaction power. You would not want to open a reverse trade that touches a high time frame imbalance. It will be very dangerous and risky trade. In this example, we are looking at 1 hour time frame. However, there is a significant 4-hour imbalance coming from the left of the chart. If you did not know that, you would probably take the trade with this high quality break here. However, as you noticed, the price keeps getting energy from the 4-hour imbalance, and it also changes the trend from downtrend to uptrend in 1 hour. This is how powerful are the high time frame imbalances. Just draw them and keep them in your charts. to reduce your risks of being stopped out. Okay folks, we covered a lot of subjects today. I hope that you are improving really well. If you keep practicing, please send me your results on Twitter or here on YouTube. I get wonderful emails. With enough practice, you can achieve this. Would you like to subscribe to the channel and help me to grow it? Thank you, take care, and see you soon.